Good evening, everyone, and thank you for joining. Let's just give it a couple of minutes to just allow everyone to come in. Just flicking through there. Yeah, you can see you all joining as we go. Oh, lots of lovely familiar faces. There's my dear friend Paul. I can see Steve's in the room as well. Yay, Steve! Mark, lots of you joining here. Perfect. It's certainly very muggy here in Hertfordshire. Don't know whether it is where you are, but yeah. So can we just do a little check even? Can you all just confirm that you can hear me? Can you give me a wave? Can you give me a thumbs up? Whatever you fancy doing. I'm going to wave back. Oh look, I've got two there from Dr. Gum Harper-Penman. Dr. Gum. Who might that be, I wonder? But at least we've got a doctor in the house if we need it. So yeah, can you do me a favour as well? Can you just, so that I can see that the chat's working, a few of you put a few non-expletives in there, if you would, that would be great. Hi from Steve. David can hear us. Hello, Stephen. Oh, lots coming in there. Orla, Mark, lovely. Okay, thank you. Okay, so I think everyone's here. Let's just get straight. Oh, lots more highs coming in. Let's just jump straight into it now. I think we're just about all here. So welcome to this Fabrik Property Group webinar. And thank you to each and every one of you, as always, for joining us. For those of you who don't know me, I'm Lynne Whittingham of Key to Freedom. And I'm delighted, as always, to be invited to host the Fabrik webinars. So the topic of this particular webinar is unlocking the secrets to UK property finance, which I'm certainly looking forward to. I'm sure you all are. So firstly, for everyone that stays to the very end, Fabrik are going to be giving away some gifts. I'll let the guys explain about that a little later on, just before the Q&A. These gifts are packed full of value and I urge you to take advantage of them. Fabrik will also send you the recording for this evening, so that's always a good one if you've missed a few bits and pieces while you've been grabbing your gin and tonic or whatever beverage you do have there. And as always, there'll be a Q&A session at the end, so please do add your questions into the chat as we go. If you could also do me a favour, which really helps me out. Oh, Keith Whittingham's on as well, that's my hubby. Hi, Keith. Keeping a little watchful eye on me there. So yeah, as you add your questions in, can you do me a little favour and just put who your question is directed at? And then that really helps me out. Saves me having to use my brain and work it out. So that would be great, thank you. So without further ado, I want you to picture this. You're sitting in a theatre and you're looking at the stage and the curtains are twitching. The anticipation is growing. There's not a sound to be heard. And then, just as you can't take it any longer, the curtains pull open and there for everyone to see is Matt Harper-Penman from Fabrik Property Group, the group director, Managing Director and founder of International Property Finance Group, Donna Spencer. Whoa! And Senior Mortgage Consultant, also from International Property Finance Group, David Crocker. Let's hear a yay in the house.
It's actually Darren, but that's close enough, Lynn.
What did I call you?
David.
David. Why did I call you David? Because I've got Darren Crocker.
Stage name.
That's my stage name.
That's your stage name.
Yeah, weekend name, that is.
All right, have you got your stage clothes on as well? So there you go, folks. You heard it here first. It's live. It's live. The curtains have opened and I've made a mistake already. So there we go. So Matt, I'm going to start off with you and I've just got to pull you up here so I can see your face during this. So Matt, be prepared for me to get my own back here. I've had the pleasure, honest pleasure of working with Matt now for well over a year. I think we're pushing towards 2 years now. And honestly, I can say I value him not just as a colleague, but foremost as a very dear friend as well. And I first met Matt when he was presenting to an audience of around 50 of us. And all eyes were on Matt. His content is enormously valuable. I can honestly say I've never met anyone with such an aptitude for numbers, and his memory recall is second to none. If you ever have a conversation with Matt about a client, you mention their name, you know, he can tell you when you spoke about it, who they are, where they're from. His brain amazes me on a daily basis. And I recall during the break that there were two things on everyone's lips that day. And I can see a couple of people here with us this evening that were also there, and I'm sure they would agree with me with this. So we're all there. We're sat there in a mastermind group, and Matt's on the stage. And yeah, honestly, we came away in the break, and the first wow that we could all give him was, this guy seriously knows his stuff. And the second was, wow, those trousers are incredibly tight. I'm not actually sure, Matt, whose eyes were watering the most, whether it was yours or ours. You were certainly the topic of conversation for not just that mastermind, but I think throughout the whole year. I don't think I've ever seen anyone with trousers that tight before. But anyway, I digress. So all jokes aside, Matt trained as an accountant in the city at the top London firm, Grant Thornton, as an auditor. Matt, could you not find a more interesting job? Was that it? Was that all that was available to you? And then Matt decided, slightly a few years later, to take up reading. And he started to immerse himself in the book Rich Dad, Poor Dad back in 2012. And he then went fully into property. Matt's been involved in every strategy in property that you can think of, from buy-to-let to commercial conversions. And Matt's technical knowledge within property is 100% absolutely second to none. He has transacted on over 650 units during his career, raising many multi-millions of pounds in property finance, both privately and through main senior debt lenders. As always, I'm very excited to hear what Matt has to say. Welcome, Matt.
Thank you, Lynn, and the jokes too.
You're welcome. When we do the next one, I've got more, just to let you know. So Donna, brilliant. What can we say about Donna? Now, as you know, I always keep it very nice and tidy with the guests until they come back a second time. No, I didn't say that, Donna. So Donna moved to the Middle East in 2014 following a very successful career with Countrywide Mortgage Services, one of the leading mortgage consultancy groups in the UK. And after a decade with Countrywide, Donna's desire to work with the international market led her to Complete Finance, the lending arm of IP Global, who are based in Dubai. Within this role, Donna successfully developed products for new markets, including countries such as Japan and Germany. Her in-depth knowledge of the buy-to-let and off-plan markets sets her apart from other industry leaders, supporting her clients to build their property portfolios with superior lending options. Welcome, Donna.
Thank you, Lynn.
You're very welcome. Glad to have you here. And do we care if it's David or Darren? Should we go with David or Darren?
No, whatever.
Let's stay with Dave. No, I need to see it again. Didn't I? It's definitely live tonight and muggy. So yes, Darren, everyone, this is Darren. Darren has worked in the UK mortgage market for the past 21 years. He joined IPFG last September, following a successful career with Countrywide Mortgage Services. And after 12 years with Countrywide, Darren's desire to work with a forward customer-focused business led him to work with IPFG, focusing not just on the international client, but the UK clients living far and wide. Darren has a vast knowledge of the UK market, from his in-depth knowledge of the mortgage lending criteria to the legal process. Purchase, releasing equity, residential to buy-to-let and off-plan markets sets him apart from other industry consultants, helping with the step-by-step process for his clients to buy their property, to releasing equity and helping build their property portfolios. Last but by no means least, and we won't hold it against you, Darren, Sorry. Darren is a West Ham supporter. So welcome, Darren.
Welcome. Thank you, Lynn, for all that.
You're very welcome. I do hope I keep your name right throughout.
Well,
So it's a pleasure to have you all here.
pleasure to be here.
So coming up in the show, folks, we have a special section from Donna and Darren. They will be discussing the lending market post-COVID-19, overseas versus UK lending, and why leverage is such a useful tool to grow your UK buy-to-let portfolio. They will also take us through a couple of case studies, which I'm certain you will find very interesting. I'm certainly looking forward to those. So guys, I'm looking forward to this. I think everyone else is as well. They've had the twitchy curtains. They've had the wrong name calling. We've got a supporter for West Ham in the room. And this is it. Matt, I'm going to hand over to you now, please.
Brilliant. Thank you, Lynn. Nice one. Great. So basically, we've got a great topic we're talking about tonight. So, and I've seen the guys' presentation. There's packed full of information that I know, I would certainly want to know this if I was starting out in property, and also for more seasoned investors as well. But, for right now, I think, this topic is something that I get talked about a lot, with clients that are existing from us and also new ones that are coming in, wanting to look at buying property. The key is how can you make your capital go as far as possible to make your best return, really. So, hopefully we're going to cover that this evening for you tonight. I mean, right now, I'd probably say it's one of the sort of most attractive times to invest in history, and that's probably down to having some really low borrowing rates, like having the lowest borrowing rates in history, really, in terms of having, having the base rate down there at 0.1%. You actually probably could, if you have savings in the bank, you're probably close enough to actually paying the bank to hold your money. So, getting it out there and being active for you with some really low borrowing rates out there is probably, a sensible thing to be looking at, and to be looking at cash flow. I know I speak to a lot of our clientele, and what they're looking for right now in this market is cash flow. They're looking for income. So, it could be a really good time for getting into the market. And that's what we're seeing a lot of at the moment. So, sort of going further from that, there's only one way that interest rates can go. They're really low. They can only increase from here. So using this as sort of a timestamp, you're looking at, this is a really good window to sort of getting some good interest rates at low prices, and then sort of securing them for the long term as well. One thing that we're seeing a lot of is our overseas investors coming into the UK, and I'm sure Donna might talk about this a little bit later on, talking about overseas investors investing into the UK, as they're seen as a safe haven for their money as well. Not just UK investors, as we see as well. Okay, one of the biggest things, when obviously COVID hit, I mean, the guys are going to touch on this a bit more in a bit later as well. You see a bit more of a slowdown, but according to Reuters, there was a massive bounce back in June of mortgage approvals. So we definitely see an activity happen in the lending sector, which we'll talk about a bit later on. Okay, so there's lots of different types of finance that we see in property. We're not going to have time to go through all of them this evening. That's probably a whole 3-day seminar, essentially, to go over those topics. But I'll tell you a little bit in brief about what those are, and then we're going to focus on sort of just one of those sections this evening. So the sort of more obvious one, which a lot of people are very familiar with, is buy-to-let lending. Those it's a very traditional way of buying property. And I'm not going to sort of steal Darren and Donna's thunder here. They're going to talk to you a lot about this one, but this is generally how you can sort of look to buy investment property on a long-term basis. You've then got commercial lending. So commercial lending, I've done a lot in this sort of sector here, raised millions of pounds, as Lynn kindly mentioned earlier, where you're looking at portfolio lending and also looking at some sort of bigger properties like mixed use with sort of shops and flats above. So this is sort of more for the sort of more sophisticated investor with commercial lending. They will actually only look at you if you've got a bit of a portfolio as well. So that's what commercial lending is, long term for the bigger portfolio or for the mixed use. You've then got bridging. So bridging it's a more of an expensive way to use finance, but it can have its use. So it can get you into a property quickly, but it will be a lot more expensive. I get a lot of clients talk to me a lot, and say they're a bit scared of doing bridging. But sometimes it can actually come forward and actually be the right way to to actually buy a property, because it all, you know, all speed. And, you know, deals like speed. You know, you can often get a better price if you're quick. So bridging can sometimes often act similar to as if you had a cash offer as well. So it can be pretty speedy. But, you know, working with the right lender is key, because sometimes bridging lenders can be just as slow as a normal mortgage as such. So yeah, choosing the right lender is really key. You know, we've done a lot of work in this space. But it usually has, you know, its use, because you'll go on a bridge and then you'll refinance onto a longer term buy to let. So that's what bridging is generally used for. Development. So development, in terms of what we look at there, is essentially that is to actually go and sort of add value to a property. So in terms of the fact that you would buy something, then you'd have a development loan in place, which would be drawn down in stages to be able to then go and, you know, and sort of build that property out, essentially. Okay. You've then got mezzanine funding. So mezzanine funding is generally sort of a second charge lender. So basically what you have when you have lending is you have a first charge. Basically that happens, you know, where the lender has the first rights to that property. Sometimes in cases you might not get enough lending from that first charge lender. So you might need a secondary lender on top, just to top up the amount of money that you're going to be needed in. These guys sit themselves quite niche in an even more expensive bracket, really, than bridging lenders. So those guys fall into that bracket. But I say, you know, we could talk forever about these strategies here, but, you know, I'm just sort of briefly going over it for you this evening, just so you know what it is. So that tops up your funding there. And the final one is private funding. So we've done a lot in this space as well, where we look at sort of joint venture funding and actually private individuals that are looking to get their money working out there. To be invested into the property market. So yeah, that's a massive sort of part of the market. People have got a lot of cash out there and they're looking to get deployed. So, you know, if you're out there looking and you know, you've got friends and families who've got cash, you know, you could joint venture partner with those guys as seed capital and then look to leverage that up with, say, one of these options here, buy-to-let finance or commercial finance, for example. Okay. Now, one thing that I would say is, you know, I'd advocate in terms of buy-to-let property, you know, as your starting point for any investor out there, if they're starting out or if they're actually, you know, already a seasoned investor. I would say always start with having, you know, a backbone in buy-to-let property. You know, you can go and do other strategies and all the rest of it later, but essentially any successful business is, you know, a property business I've seen has a solid backbone of cash flow. You know, through my career, I've had buy-to-let property. And if you watched the webinar we had on 2 weeks ago, where my business partner, Stevie Jacob, was talking, he was talking about buy-to-let being one of the most resilient asset classes during COVID-19. And I have to agree with him. You know, my properties, I've got buy-to-let properties where I've got tenants in them for, you know, over 6 years, continuous. And I've also had other asset classes which haven't had that continuous. So, you know, in terms of its sturdiness, you know, buy-to-let has definitely stood the test of time. You know, when COVID-19 hit, some of the other asset classes wobbled, you know, sort of in the holiday sector and stuff like that. It's not to say they won't recover, but, you know, buy-to-let would be my sort of staple for any property investor's portfolio. So there's a bit about sort of types of finance we've got. We're now going to head into, you know, the special section from Darren and Donna. I'm going to be around at the end for questions, so please do put those in. But yeah, I'm going to hand over to you guys now, Darren and Donna.
Okay. Can I take you? So basically, I'm just going to do a small introduction to International Property Finance Group and the UK arm of the business, which is International Property Finance Limited. So between Darren and myself, we've got over 40 years of experience. I know we don't look like that, but we do have 40 years worth of experience. The UK arm of the business is regulated under the FCA. And we've got access to over 100 lenders, but we are directly authorised by the FCA. One of the reasons we joined the Mortgage Club was really to give our clients the access to all types of lenders, and we can look at private wealth lenders, or we can look at specialist lending. You touched there on bridging finance. We can look at all aspects of finance when looking at the client. So it's really about assessing the client's needs and seeing what's right for them. Can I just move that on? Sorry. So just a few things I wanted to discuss before we go into any further details. We've kind of been through such a weird 4 months. For about 6 weeks, Darren and I were counsellors. We had clients that were buying property, and our clients are based globally. And we had clients that were buying property that were off plan, and they had set completion dates. And lockdown happened in the UK a little bit after where I am in the Middle East. We sort of went into lockdown the early part of March. You guys were sort of back part of March, and then we couldn't get any surveys done, and there was completion dates that were looming, and everyone was panicking. So we just literally had to down tools, say, right, okay, what's going on, speak to developers, see what the situations were, and we had to really just sort of work with the client to put their minds at rest and make sure that developers understood that if there were surveys going to happen, you know, when they were going to happen, and the timelines that were going to be realistic. When the market came back, we had, I think we had 10 major lenders for our international buyers that completely pulled out of the market. And then when they did come back in, they all reduced their loan to values quite heavily. So clients that were reliant on sort of 75% loan to value loans, the lenders were coming back in at 60. So we were having to deliver that information that the client had to then find another a 15% deposit. So as these products were changing, we were then going back with good news. You've now got to only find another 5% because the lenders were going from sort of 60 to 70%. So there was a lot of change, and it was almost like on a weekly basis. You tell client one piece of information, and the following week you were telling them something completely different. But the clients were really appreciated that we were there, and when everyone else was doing this, we were sort of there chatting to them and telling them what they can and can't do, and fighting their corner really with the developers. With our international buyers, they always sort of seem to get a bit of a raw deal really, because the domestic buyers will see the rate changes with the Bank of England, whereas the international buyer and the expat buyer, that rate changes do seem to take a little bit longer to filter through. So although you mentioned, Matt, that the Bank of England is at 0.1, actually the international buyer rates don't really change that much. And I've been in this space for nearly 7 years, and really it hasn't changed too much in those 7 years. The products haven't changed drastically in those 7 years. Unlike Darren, I mean, you would say in the UK market, because you deal mainly with obviously the domestic buyer, that's massively changed for those buyers, right?
Yeah, definitely. The Bank of England base rate, the savings has been passed on to the UK residential buy-to-let type stuff. I think we'll touch on in a minute is, I think with the wariness of the banks at the moment, with, like Donna was saying, reducing the loan to values and those type of stuff, some of the lenders have actually started increasing the rates a little bit to try and slow the lending down. I had a call with two big UK banks today, Halifax and Nationwide, and they're actually encouraging brokers like ourselves to actually not call them and have a bit of patience with them, because at the moment they're just inundated with all these applications because the rates have been coming down, and they just haven't got the staff, because a lot of their staff are still working remotely on furlough, that type of stuff. So they're just inundated with applications, because it is, like Matt was saying, the applications for mortgages have just shot back up again, and the lenders at the moment just can't cope. So and this is where Donna was sort of saying, instead of burying our heads in the sand, we've actually been putting our head above the trenches, if you like, and actually just making sure that the clients are fully aware of what's happening. It is taking slightly longer, but yeah, the UK market is slightly better than the foreign investors, which is awesome.
We've also seen when all the surveyors had sort of stayed at home, and then they all came back, and there was, I think there was in the region of sort of 450,000 surveys that were due to take place. So there was a massive delay on those. And then what we were finding, we've got some very cautious surveyors. So depending on the surveying company that bank is aligned to will depend on the outcome. But I mean, that's up to us to manage that and to appeal it and so on and so forth. But we have seen the cautious surveyors as well come since post-COVID. So yeah, that's also another thing that we have seen. Can I just move
what we're actually doing with that one as well is because of the experience that me and Donna have got, we know which lenders we use, which survey departments, and which survey departments aren't the great for certain developments. So we're actually, when we're making recommendations to our clients, we're fully aware that actually that we don't want to deal with this lender because that lender uses this surveyor. So it's actually just as part of the research we actually do, we actually go into that much detail. So there might be a rate that might be slightly cheaper for you, but you've got probably no chance of getting the funding on that because the surveyor will be too bad. So that's as we dig down really deep into those things as well.
Absolutely. One of the things I want to talk about tonight as well is the misconception. So I know that, I mean, I speak to so many people in Hong Kong, Singapore, Vietnam, Thailand, Kuwait, Saudi. I mean, that's just sort of a small part of our clients' base, right? One of the things that many people say is, oh, it's so hard to get a mortgage. And it might be that they've spoken to a friend of theirs that's found it really difficult. Now, I'm not going to say it's easy. At the end of the day, we all know about anti-money laundering, and we know that we have to prove the money line and where that comes from. But what I will say is that with a little bit of full process and to making sure that all of your documents are organised, and we will check those before they go over to the lender anyway, leveraging the purchaser would be so much better off than a cash purchaser. And I wanted to sort of bring this to light this evening and just to sort of go through why that's so important. So we've taken a purchase price of 385 and we've done an annual growth of 3%, okay, with the assumed rent of 4% per annum. And we've worked that on an interest rate, which for an international buyer, this is actually quite a stable rate of 3.24. So if we looked at the 10-year growth, and you've all got the numbers there, you can see them. But if you looked at the 10-year growth, and all of these numbers are gross, by the way, not net, you can see the 10-year growth there. For the capital growth would be 117,337. Okay, and then if you looked at the rental return, you've got 176,543, and then you've got the mortgage costs that are obviously showing there. What I want to do now is just bring you onto the next slide, which shows you by putting in your mortgage, your deposit at 30%, the return on investment on a mortgage property and one without a mortgage property. So if you did purchase a property without a mortgage, your return on investment would be 76%, whereas when you're looking at only putting in 30% deposit, your return on investment is 179%. And we can drill down on that when you're looking at each unit, and we can work that through for you. But I think what it goes to show as a top level here is how much actually it's so much better off with a little bit of determination with getting your documents organised and making sure that obviously you can get the lending, that you're not putting all of your eggs into one basket, and you could spread your cash over several properties if your cash allows you to do that. So I think it's a really important to consider when you're purchasing a property to spread out your cash and to look at leverage regardless of where you're sat in the world.
And you're also spreading your risk, so you're not actually risking all of your money in one go. You actually the risk is actually being taken on by the lender, not by you. So instead of putting 385 of all your money in, hopefully the market obviously grows like we've explained, but actually if you put a smaller amount down, you're not risking as much of your own cash.
So completely diversifying the portfolio that will allow you to do that. Your savings are going to be working a lot harder for you, and it basically in the long run you'll be in a situation where you've got a lot of income coming in from various different properties. So I mean, when I turned 18, my uncle knocked on the door because he was the man at the Pro, and he said, "You need to take a pension." And I went, "Okay then." And actually, the property that I bought at 22 has done me a lot better than the pension that I took at 18. so actually, the long run tells us, and history tells us in the UK, that property, if you hold on to it long enough, the capital growth is always there anyway. And as we know, the supply and demand in the UK is you know, they're never going to build enough houses for the supply or for the demand that's needed. So, you know, that's definitely something to give more thought process into. And we'll take you on to the next slide. So I want to talk about the process and our process. So one of the things that I was really passionate about, I worked for various companies, and when you're working for an international company, you've got the client that might sit, let's just say, for example, in Vietnam, and those documents might need to be translated. You might have to look at the way that your salary comes in, the different tax aspects of your salary. So if Mr. Brit lived in Vietnam and went back to the UK, looked for a property, and he thought, right, I'm going to go down the high street and I'm going to see if I can get lending. And he walks into Halifax and says, oh, Mr. Halifax, can I borrow X? And they'll say, okay, fine. Where do you live? I live in Vietnam. And how do you earn your salary? Oh, I earn it like this. And what's your document? And here's your document. And oh, by the way, it's not in English. Halifax is going to say, no thanks, we really don't want to touch this loan. So what we do as a company, which makes us very different, is we actually specialise in those kind of clients. Here in the Middle East, we don't have a postal system, and many women here don't have documents in their name. It would normally be in their husband's name, okay? So it's ways of getting around those obstacles that we will help you with. So that's really important to us, that people, they might knock on the door of their local bank when they were back in the UK and they might say no, and then they're under the illusion that actually they can't get finance. When we would look at that client and go, actually they'll fit with that lender and that lender. So it's all about making sure that the client's information and the lender's criteria completely match, and that's where we get the lending options. And we always ask you to start this early, because there's no better feeling than having the conversation about the finance and then going out, having a chat with Matt and saying, actually, this is what I've got to spend and this is the money and I've looked at my budget. What have you got, Matt? And then you know you've got that peace of mind there that you can actually proceed with that property, and you know that you've got those, you know, that mortgage sat in the background. We'll give you a very overview sort of typical documents required, and that's your normal as it would be in the UK: 3 months pay slips, 3 months bank statements, proof of deposit. Things that are a little different here is you do have to have your documents certified by certain types of certifier, because obviously that lender's never going to see you. You're never going to just walk through the door and say, can I borrow some money? So there'll be certain documents that will be a little bit different to the UK, but on a top, as an overview, actually they're all pretty much of a much. So yeah, it's quite straightforward really, and it's our job to make sure that we take you through that process and make sure you understand. And one thing that people say to me, and I know they say it to you, Darren, they'll say, oh, I know this might sound like a stupid question, and actually there's no such thing as a stupid question, because I've been doing this job a long time, and Darren's been doing it a long time. I'd rather have someone ask me a question and walk away knowing that answer and feeling comfortable with what they're doing than not ask it because they think it's a stupid question. So any question that you want to ask, then we're more than happy to go through that with you so that you're understanding and you're comfortable with it. That's really important. So here, probably looks all very small, but we have this document that Matt and his team can hand out. This is a step-by-step guide. And this is really aimed at the international buyer, and Darren's deals with the domestic clients. I've been out of the market too long for me to deal with the domestic clients. He's much more switched on than I am, whereas I'm the lady that knows about the international buyer. But this here just basically shows you, on the right hand side you've got what you do, and on the left hand side you've got what we do, and it gives you little time slots there, which sort of how much of your time it should take. And as you can see on the little ladder guide, you've got your sort of 15 minutes, your 20 minutes. The 90 minutes there, you'll see the process mortgage application. That's us really, that has to fill in quite a lot. But we do ask you to set time aside to go through your documents and make sure that when we asked you for information, if you are going to struggle with getting that information to us, let us know. There's always normally a workaround. So if you said, well, actually, I haven't got proof of address, It might be that we go to your employer and get them to certify that you live at your address. Or it might be that we get a lawyer to go around to your house and say, yeah, we've been around their house. It might come at a little bit of a cost, but we know that they can obviously certify that you live where you say you live. So this little guide here just basically shows you the step-by-step guide, which takes you through to mortgage offer and then through to completion. And we always say to our clients, if you're buying a new build, try and do that try and start this process 6 months before completion. If you're buying a property that is, let's say, a year off plan, then I would definitely say to you, you talk about the finance from the outset, because as I said, it would be a really nice feeling for you and comfortable for you to know that you've already checked out that finance and that you can get that lending. Now, things do change, and there are lenders that do change their criteria, and I can't control that. You can't control that. No one can control that. What we do have is we do have lenders that can step in if there was an issue. Let's say, for example, if someone lost their job and they were they were purchasing a property and they'd committed to that, we do have lenders that can step in and help fund that. Now, you mentioned earlier, Matt, about bridging loans. We also have a fund that we use, which is a little bit different. They are quick turnaround. The interest rates aren't as high as the bridging loan, but then the loan to values aren't as high as what a bridging loan would be. So we've had cases where a client has lost their job and they can't pay for, they haven't got any way of basically paying for the mortgage, but they've got enough deposit and we've managed to get them lending, and that's for the international buyers. So definitely have a chat with us. We do ask you to keep us in the loop if you were buying something off plan and it was a year away and we'd spoken to you, and then if something did change, please let us know, because the earlier we know about that, the more we can do for you. So that, I would say,
that's been really quite relevant actually with, sorry Donna, that's been quite relevant with furlough and COVID-19, especially in the UK market. Lots of people are on furlough. Lots of lenders are saying, well, actually, if you're on furlough, we need letters from employers to confirm when you're going back, your income, because as you can appreciate, especially with the domestic market, they look at your last 3 months pay slips. But if your last three pay slips you've been on furlough, suddenly you've gone from earning X amount to actually probably being 80% of that income. So I've had a client where his income has come down and suddenly he can't generate the mortgage. So we've had to have workarounds of that, but that's where Donna was saying, look, we can help with all those processes. So
absolutely. So these can be handed out. I mean, this is just showing you in more detail here, a closer up picture, but these can be sent out if you speak to Matt and the team. The guys can send this out to you, and we normally send those out with our fact finds anyway. So making sure that you've checked out your financing, making sure that we actually look at the developments as well. So what we do is when someone comes to us and said, actually, can you help us with our clients, they want to buy in this development, we send out quite an in-depth spreadsheet, which Matt will absolutely agree with, because I've sent it to him. So that will give us lots of information about the construction. It will tell us about the ground rent. It will tell us about the building warranty, all the details about the property, how close it is to a flyover, if there's a phone mast quite near, if there's a petrol station near. With all of those little bits of information that actually could make a lender say, no, we're not interested in lending on that. We are
gone a bit Dalek-y.
Yeah.
Are you still with us, Donna?
The developer for that information, and then we ping that out to the, whereas they used to say, yeah, it looks okay, and then that would be it, whereas now they're actually sending that out to the surveyors. So we make sure that we know from outset which lenders are going to lend on the projects. So we already do the due diligence on those projects. We want to make sure that this process is as smooth as possible. So that's why we asked you if there are any changes, let us know, and we can obviously manage that. But it's important that we lock in the lenders as soon as possible, because I don't know whether many of you are aware, but every lender will have an exposure limit on a building. So for example, Barclays are at 20%. So if you have 100 units in a block, no matter how wealthy you are, no matter how great you are, how much money you've got, that client will not, that lender, sorry, will not allow any more than 20 units to lend on. So we have to manage that as well. So we need to make sure that the lender make sure that you get in early, get your mortgage application in there as soon as possible. Anything you want to add on that, Dan?
No, and I think that, like, I had a client this morning, and he asked me about a development, and I had to phone the lender. Literally, out of all the options they've got left, they've only got 4 applications they can actually place for that. So I've told the client, unless you actually get moving now, I can't guarantee you're going to get any funding on that. And literally, that lender was the only lender that could actually lend to that client due to his criteria. So he's had to move pretty quickly. Or, like Donna was saying, we have to go down the route of either bridging or private funding and that type of stuff. So it is a case of making sure that when you've been looking for properties, actually making sure we get the funding and lock you into that property. I've got a client, the development's not ready due to be completed for a year, but because I knew there was very few units within that development, the clients actually paid for survey and everything else sort of moving forward really, really quickly. So
perfect. Darren, we seem to have lost Donna. Are you
no
happy
problem
to
at all?
just carry on?
Yeah, no problem at all.
Thank you.
Say no, she's popped back in.
Oh, she's come back in.
There you go.
Turn the Wi-Fi off in the UAE about this sort of time. Darren, do you want to run through these case studies just in case I do dip out again? It is a little bit dodgy here.
So what we found is we've been using these for quite a few these webinars, really just giving a flavour of the case studies and really get the sort of point across about making things sort of do things really, really early in the process. So we've had a client where everything was going fine, didn't want to do anything until closer to the time, didn't obviously obtain the pre-approval, and obviously with COVID and lenders' rates changing and the international market being a little bit sort of volatile with the COVID side of things, we were unable to actually do any. We couldn't find. Both me and Donna spent. Well, if we're being paid by the hour, we'd probably be paying the client really. So, but we couldn't find any lenders at all for this client, and obviously very frustrating for us, and obviously all the hours we put in. But the only way you could actually do it was sort of completing on the bridging finance, and the cheapest bridging finance we could find at that particular point for this one client was 0.6% per month. So you can appreciate that's like over 9%, and obviously we were looking at rates of 3-4% for the mortgage. So he just couldn't afford to do it, because then it become income negative. So his actually bridging money was actually more than the rent he was achieving. So it wasn't really what the client set out to actually do. So and unfortunately the client then had to sell the property. So his dream of actually owning a property and generating some income just wasn't there. So sort of soured the taste, if you like. So but if we go on to that case study 2, please. So what between myself and Donna, we got the pre-approval, like Donna was saying, 6 months before completion. So we looked at all the market, we looked at all the lender's criteria, checked all the exposure and everything. So client was able to actually obtain the actual mortgage in principle. The bank changed, but because of the experience with myself and Donna, we've actually straight onto that straight away. We checked with the new lenders, we explained to the client there was nothing being hidden, so it was all very transparent. The client was happy with the changes. Like I said, we couldn't do anything about it. The client didn't do anything about it. But actually, we got onto it straight away, and the client was able to actually get the bank mortgage funding. So
it was actually the bank accounts, wasn't it, that changed? Do you remember?
Yeah.
So it's what the bank wouldn't accept. So they basically wouldn't accept a offshore bank anymore, and then they changed it. So we, as soon as it changed, even though there was a long period to completion, we told the client, and they got on it straight away. So when we did come around to doing the mortgage, we weren't then going, have you got a UK onshore bank account? They'd already sorted it.
Because you need that as well. You need a UK bank account onshore, and if you haven't got one, then again, that's part of what me and Donna will do, we'll actually point you in the right direction what you can do.
Good.
Slide.
So, for the British expat sat anywhere around the world, you can be looking at rates 2.94 to 5%, depends on your circumstances, but we would tell you that from outset. Foreign investors slightly different. You'd be looking at sort of 3.24 to 5%. 5% is really sort of the max of what you should be expecting to pay. So just on that, we would always tell you up front what products you could expect to see before you enter into any terms of business. We would already go out and look at the markets for you. We'd give you a report and show you the products that were available. And then once you're happy with that, then we would start into terms of business. And that allows you to give us access to give your information over to the bank, which is the pre-approval stage. But these are the rates you could expect to look at. The domestic market's completely different. Darren, what would you say for a buy-to-let client in the UK?
And for a UK person living in the UK looking to either release funds from their buy-to-let to maximise and leverage to buy more, the interest rates for buy-to-lets at the moment are anywhere from 2% to the 2.993% really. So you pay a little bit more premium on a buy-to-let because of the risk factor for the lender, but actually on a straightforward buy-to-let, yeah, anywhere between 2 and 3%. If it's a residential, you've got looking to release equity from those, depending on the loan to value. I talked to a client this morning and the rate was 1.41 on a residential basis, and they were looking to release equity to buy a buy-to-let. So we've gone through that, but yeah, on a buy-to-let, anywhere between 2 and 3% really if you're in the UK.
Just on that as well, before I go on to this next slide, what I would say is we've seen a huge increase in people that are reviewing their mortgages. So not just on their, so they might just want to review their mortgage to see if they're on the best rate. And that's something that we can do for the client, absolutely. What a lot of clients are doing are they're looking at their properties and how much equity they've actually got in their properties and looking to refinance, release that equity, use that equity that they release as a deposit on another property. And that I would definitely urge you to have a look at. Make your money work smarter for you. Make sure that you're trying to look at every opportunity, and we can help you and guide you through that to make sure that you are using your money in the best possible way rather than it just being sat in property. Sorry. So just here, typical purchase price 385, deposit. Normally, I would say on a new build property for a buy-to-let client, I would say really you should be looking at 70% loan to values, 30% deposit. There are lenders that will lend higher, but if any market changes and you've worked on 30% deposit and there has been any market changes, you're in a pretty safe place there to work up with a 30% deposit. So I always say, let's be safe. Don't shoehorn yourself into a deal. You're better to go for a lower purchase price and make sure you're comfortable with it than trying to put all of your money into to make sure that that you get to the sort of higher loan to value. So there are products out there with higher loan to values, but I always say work on the 70%. It's a nice figure to work on. If you were looking at a deposit of 115,500 over 25 year on interest only, your payments per month would be £727.65 per month. And I believe on a, if you go to the next slide, on a property price of around, if you're looking at an average sort of yield of around 4%, would that be about average? Then obviously you'd be in a positive on an interest only with interest rates around about that 2.94. So
obviously if you want to do it on a repayment basis, we are able to offer those options as well. But like Donna said, you just want to make sure that you're positive cash flow really. But I do get clients asking me what repayment is as well. So you're paying the mortgage off as you go. Just depends on how you want to look at the purchase. I know Matt was saying right at the beginning, a lot of people are trying to generate income at the moment. So interest only is very favourable. Because on those scenarios, you probably find the rents maybe £1,000, £1,200, whereas a repayment basis, you might find your mortgage payments that sort of close. So when we go into the details of the client situation, we'll look at and we'll ask those questions. Are you looking to try to generate income? You're looking for capital growth? and not worry about the income. But everyone's situation is completely different, but we look into that as well for you.
I always also found the difference between the UK market and an international. Most international buyers want to do it on a repayment. I don't know why. When I was in the UK, no one ever considered doing a buy-to-let mortgage on a repayment. It was always interest only. So when I came here, it was all a bit alien. People go, oh, I want that on repayment. And I was like, really? Do you? I was quite surprised by it all. But yeah, I mean, it depends on where you are in your life, what you want that property to do for you, if it is income, or whether whether you've got time on your side. Even though there are mortgages out there now that take you up to age 99, believe it or not. So we will have that conversation with you to make sure that you're comfortable with what the loan that you're about to take.
One interesting point, just to add on to that, Donna, is some of the clients actually, if you took an interest-only loan, obviously, I don't know, people out there, you can actually make overpayments to that mortgage up to about 10%. So it can be both if you chose. So that's something a concept that some people out there don't realise they could actually do, and you can have a bit of capital and a bit of interest when you want it to be. You
can actually split the loan, Matt. You can actually say, I want half of my loan on repayment, half of it on interest only. So you just, the client might say, well, actually, I want the rent to make sure it's paying the mortgage. Well, but I want to do both. So then we'll just say, well, part of this amount is on repayment, this amount is on interest only. So, but yeah, they're the things that we discuss anyway. So.
Yeah.
Perfect. Thank you, guys. Can I just say, thank you very much for the information there. Certainly a couple of things in there that really kind of went in my head that I've not heard before, particularly the amount of units that say a bank can lend on in a particular development. That's the first time I've heard of that. So really appreciate your information and knowledge shared there. So before we go into the Q&A section, I have got questions coming at me from all over the place, as I usually do. So before we go into there, Matt, can I just ask you please to tell everyone about today's giveaways?
Yeah, absolutely. Yeah, so we've got 3 giveaways this week. We've basically got our investment guide. So if you want a copy of the investment guide, that's one thing we'll be giving away. Really useful information. Dale Anderson, Managing Director of Fabrik Invest, our investment arm there, he's spent a lot of time putting a lot of information there, so that's really valuable for you to look at. We've also then got number 2 is our bespoke investment plan, where we'll sit down one-on-one with you and actually devise what the best route is for you to hit your goals. That's number 2. And then number 3, I think you all agree from the content that both Darren and Donna produced tonight, and actually show they're very ethical in their approach as well. it has to be right for the client. If you'd like to spend some time looking at your situation and getting yourself pre-approved for a mortgage, then also we'll be giving that away as well.
Perfect. Thank you, Matt. Amazing. So always great giveaways from Fabrik and our guests. And as I said earlier, I do honestly urge you all to take advantage of these. Last week, we were giving away the investment plan as well. And as Matt said, it's a bespoke investment plan, and people that took advantage of that have been truly grateful. They've already had massive benefit from it. So before we go into Q&A, I'm going to get you once again to get those fingers ready. If you would like a copy of the investment guide, please put guide in the chat and we will get that across to you. If you would like the plan, please put plan in the chat and we'll arrange for a personal consultation for a bespoke investment plan. And if you'd like an appointment with the guys at IPFG, please type in IPFP. That's the 3rd time I've said something wrong tonight. IPFG to the chat and we will sort that out for you. On the other hand, if you would like to not try and spell any of those words and would like the whole lot anyway, just go ahead and write bundle in the chat there and we will ensure that you get absolutely everything, including the recording. And Matt, if we can please make sure as well that we do send everyone a picture of that chart that the guys supplied there, that would be good. So yes, so questions, just a reminder, please, if you could put your question into the chat, and who it is for, I would be extremely grateful to you. So let me just, oh, there's lots of bundle. Yes, lots of bundles, IPFG and guides and, thank you. God, you're all like going after the freebies tonight, aren't you? Yes. And as I said last week, not an ebook in sight. So, yeah, I'm sure you'll all enjoy these giveaways. So the first question here, Darren, is for you.
Lovely.
Your starter for 10 is from Steve McGlynn, a great friend of mine. And he said, Darren, quick question. I have been made redundant and I'm now launching my own business. I've been in a fixed mortgage personally for 4 years and it's up for renewal in June next year. How will I be affected and will I be able to get a mortgage renewal? I'm with HSBC.
God, blimey, that's a good old question, that one. So,
Yeah.
So the situation is, sorry, you obviously made redundant. Obviously onwards and upwards with your new business. Hope it's obviously successful. But when it comes to mortgage lending, if you go to another mortgage company, they will request at least 2 years worth of accounts to prove that you've got a continual income moving forward. If you stay with the same lender, that's something we can help with. So we can look at your options going forward. We've got funding that we can help with that as well. If you stay with the same lender, they will ask you for income proof, especially with you changing your criteria as in going from being employed to self-employed. It really comes down to the loan to value. By all means, Stephen, if you want to contact Matt, and Matt can pass your details on to me, I'm quite happy to have a chat to you over the phone. Again, it also depends on where you are based. If you're based in the UK, there's different things we can do. I'm quite happy to look at all the options for you. So yeah, happy to sort of discuss it further on a one-to-one basis. Not a problem at all.
Perfect.
Sometimes on that, Darren, you can do a product change without much information, but if it's with the bank that you bank with, then that might be a little bit difficult. But if it's literally just a product change, sometimes they don't want any information either. So you can literally just do a product change without them even.
Yeah, product transfers at the moment they're realising with furlough and obviously lots of people being very redundant, they're asking a few more questions now to sort of ask. It's down to, I suppose, the broker and the client to making sure they're putting the information correctly on the application. If you're saying, oh yeah, I'm still in my, nothing's changed, and you have changed, you've got the issue then of the lender finding out some way and actually then turn around and say, well, actually, we're foreclosing on the loan. So because you've technically made false on the application form, so I don't want any client to be put in that position. So, but by all means, Stephen, email me and I'll go through or contact Matt, and then we'll go through the options for you. But good question.
Great, thank you. So just while we're on the mortgage application, some of these obviously get through sort of privately. So I take it from that, guys, that you don't want me to mention your name. So forgive me if I don't mention your name, but that's my assumption from that. So Darren, as somebody said here, how many people can go on the mortgage application?
Normally there's lenders that do normally 2, but some lenders do up to 4. But when it comes to affordability, the lenders, especially UK domestic ones, will take the top 2 earners to justify the affordability on the lending. That's obviously if you're going to do it in sole names. So some people want to do purchasing through a limited company. But yeah, majority of two people, but you can have up to 4 depending on the lender.
Right. Okay. And Donna, someone's saying here that the chart that you supplied there was absolutely sort of second to none, and they're asking how long does it take for the pre-approval process?
No more than a week. Some lenders are literally, we can key on and it'll be like within minutes, and some lenders you have to give supporting information just for a mortgage pre-approval. Right. So I would say anywhere between 15 minutes and a week. Really does depend on the lender.
Okay, thank you. And another one here for you, Darren. With the news recently about lenders increasing the deposits required, how has this affected the investor-led applications?
It hasn't really affected it too much because, like Matt was saying, the actual demand for rental properties has gone up. It's more the domestic side of things that have changed the loan to value. Like Donna was saying, the lenders have been reducing the loan to values down a little bit just to sort of stop the risk element to the lender. But actually the investment market, 70%, like Donna was saying, 65% hasn't really changed. They've done a little bit more stress testing on the rental, but actually that hasn't really affected the investor market at all. So that's
right.
it's
Okay,
been really
thank
good.
you.
It's been more so on the residential side, but we can get around those types of stuff.
Okay, great. And AK is saying, what are rules around existing property owners who are in the government equity scheme who want to go into buy-to-let?
Are you AK? Are you talking about the Help to Buy scheme? I don't know.
That was my assumption. AK, can you just confirm in there, please? Yes.
Yeah. Okay.
Yes.
So you're in a Help to Buy scheme at the moment, and then you want to go into the buy to let. Yeah, you'll still be liable for normal stamp duty, etc. So it just basically means you can't buy, and say you're buying off plan, you can't take another Help to Buy scheme on the buy to let.
Right. Okay.
Hopefully that answers the question.
Yeah, lovely, thank you. And Rochelle's asking here, if you had 100k to invest, would you buy a single unit or leverage the money over multiple?
Donna?
I'd first and foremost look at where the properties are. I would look at what you're putting money into. So, and Matt can help you with all of that. I would probably do multiple. And I'm looking at it, it was like my money, right? That's the best way to, whenever you advise a client, it's whether you look at it as if it's your money. So there's lots to consider, but if I could do it over two, then I definitely would do it over two.
Yeah, I would say exactly the same. I'd put, what's the average price, Matt, of a property?
Sort of unit, around about sort of anywhere from 100 to 200k roughly.
Okay, so if we said 160, to answer Rochelle's question as well, 75 was 70%. So if you got £100,000, put 30% into a property for two properties, keep the rest of the money back to pay any additional fees you've got to pay, or a bit of a buffer. So
yeah, it's about right, isn't it? 160.
Yeah. Because if you've got one property and you've got, and this is going back to the cash side of things, if you've got one property and that tenant doesn't pay the rent, you're not making any money. Whereas if you've got two properties and one tenant, the rent should really sometimes is paying both mortgages, so you're making that as well. So the risk element to yourself is actually gone down.
Absolutely.
Yeah, absolutely.
The risk element, I just have to add there, the risk element is 100%, right there. You're actually going to spread your risk by having two different units. I mean, so I say 100 to 200, but I mean, literally some of the projects we're working on at the moment, we can get one bed for about 110 and some two beds for about 130. So some really competitive. So you could even get possibly three there, yeah, absolutely agree.
Yeah.
Matt, would you agree that I would always normally say do it in various different locations? That would be me. Would you say the same?
Yeah, I mean, what we've done traditionally, I've got investments in three areas. So, that would sort of answer your question really, basically. So yeah, I would definitely say that's a good thing. And looking in areas which are growing, really, sort of growth areas, that, you're going to get some really solid cash flow, but also going to get a bit of capital appreciation as well. That's one thing that we probably made a mistake of earlier in our journey. We've got a lot of cash flow, but not massive capital appreciation. So that would be my advice.
Perfect. So Darren, how has the furlough scheme affected the mortgage process, and what impact on the lenders?
I think I touched on that a little bit earlier, Lynn, to be fair. So the lenders are being a little bit more cautious with people in furlough. So because obviously the pay slips don't sometimes look at, but what they have been asking for, especially for the domestic market, is what was your income prior to COVID? The furlough scheme, they'll get a letter from the employer to confirm when they're going back and what the salary is going to be. I appreciate sometimes they might be going back on reduced hours. So the lender will look at the income going forward, but they can see obviously a track record. So it's down to individual lenders really. Some of them just aren't taking any furlough clients at all. So that's sort of and that's just temporary, I think. So some lenders but yeah, it's looked at individually, which is good. They are still lending, which is really good.
Perfect. And Rochelle is asking again here, actually, what percentage can you get from a bank for a buy-to-let?
Domestic, you're talking maximum 75% loan to value, but most of them at 70% at the moment.
Right, okay. So Steve actually popped out to walk the dog and lost his signal at the point he was answering his question, bless him. So yeah, Steve.
Was boring him?
He did actually message me that privately, but I thought I'd share.
Thank you.
Sharing is caring. But yeah, Steve, we will get the recording across to you anyway, and obviously we'll sort you out an appointment with Darren or Donna, so no problem there. So what else have we got? Matt, I've got one here for you. Would you say to not buy cash and get finance, even if you have the cash amount at hand?
Right, okay, good question. So there's two answers to this question. What we touched on earlier, I 100% would advocate spreading that pot amongst different properties and diversify it in different areas as well, across multiple units. You actually, through leverage, I think Donna explained it and showed it pretty well on her slides earlier, where she showed the return on investment is a lot higher when you actually look at deposits in multiple investments. Now, having said that, there is certain situations where a cash purchase would be beneficial. Sometimes I mentioned in my section earlier that a deal likes speed. So sometimes having a cash offer could get you a better deal. So, but then in those circumstances, I wouldn't say to buy it cash and sit on it cash. I would suggest that you bought it cash and then you'd reach out to either Darren or Donna, for example, and refinance that cash to then go into other investments. So it's a bit of a two-part answer, but the eventual is both into multiple assets.
Perfect, thank you. Another one here. So Donna, I think we'll pass this one over to you. Haven't heard your buzzer go off for a while there. So this one's yours. How have the changes to the SDLT rate in the UK until March affected the mortgage market?
Well, there's not enough hours in the day. Honestly, it's like, I can't explain it, right? It's like, so with the lenders, you've still got some staff that are on maybe a reduced furlough. So and some of them are still working from home. So you haven't got the staff levels that you would have. So the timescales it's taking for that mortgage application to be processed is a lot longer. We were talking to a bank yesterday, and that's sort of 14 days before they even pick it up. And it's just the case. So we've got that. And it's just gone crazy. We've had our record months, and people. I'm sure people think that we're fibbing, but so Darren and I, we had a weekend last weekend, didn't we? We haven't had a weekend for ages. Well, sort of. Yeah. I did. I definitely did. I was like, I can't talk about a mortgage. And I got in the car with my friends, and my friend went, Can I talk to you about mortgage? And I went, no, absolutely not. I don't want to talk about it. But it has been crazy, absolutely crazy. People are taking advantage of it. I've got clients we've got quite a lot of clients that are relocating back to the UK. It might be that the wife and kids are going back and husband's still staying out here working, and they're relocating. I've got a lovely couple, I've known them for years. They're looking at sort of near the £1 million mark. These properties, they're putting offers in, and their properties are literally going the same day. They're like, they can't get on the market. They can't get on the ladder because they're trying to buy a property. And even at that value, sort of £1 million, properties are just being snapped up. So, and the estate agents, they're also saying they're busy. Everyone I'm speaking to is saying, we've had our record months. It is just gone crazy. So, yeah. How has it affected us? We're all tired. That's how it's affected. It's been amazing though. It has really been amazing. And I think the government, they've made a few mistakes with this whole COVID, but they've done some pretty amazing things as well. And this stamp duty holiday, I think, it's what the market needed, definitely.
But just be very aware that if you're an international buyer or even a second buyer, you've still got to pay stamp duty. If you're a second-hand buyer or second-time buyer, you don't pay anything.
It's reduced.
Yeah, 2%. You just got 3% surcharge, so you just pay 3% of the total value. But again, when we go through the options, we'll go through that to make sure you're aware of that.
Lovely, thank you. Adewale is saying, what's the best way of paying off Help to Buy scheme or remortgage?
Thanks. So remortgaging at the moment, the maximum is about 80% loan to value. So the way you got to look at it is the value of your property, total value of the property, 80% of that. So if that gives you enough, if you've had enough growth in the last few years since you've done it to actually take out a chunk to actually pay that Help to Buy off, then great. But yeah, it's just making sure that you can do that. That's the easiest way, is remortgaging. As long as you've got enough equity on top of that Help to Buy to sort of keep 20% of equity in that property, that's the way of doing it.
Okay, great, thank you. And the next one is there a cap on the amount of properties that you can get mortgages on?
No, once you've got more than 4 properties in the UK, you suddenly become a portfolio landlord. So the risk element to the lenders are slightly different, but no, got lenders that do domestic, for instance, domestic buyers living in the UK. We've got I've got a client, I'm managing his portfolio, and he's got 55 properties, and I would say 80% of those are with one lender. So it just comes down to the risk element for the lender itself.
Just to add on to that question there, Darren, just to maybe elaborate there, with say for example lender, would you advise to have per lender a different entity that's got properties in those?
So every lender, most lenders will say you can only have a certain amount with that one lender. So the Lloyd's group, across that Lloyd's group, so you've got a few lenders within that. They will say you can only have a maximum of 6 mortgages within that one group. So you can't have any more than that, but you can have as many as you want with anybody else. But then you've got other lenders that say you can only have a maximum of 6, otherwise you can't use us, and that's across that group as well as everything else. So, but again, when it comes to the criteria, these are the stuff that we'll drill down into. So when we are, if say one of your clients here, or there's a client on the call that might have a more than 4 or 5 properties, thinking, well, how am I going to do this? When we actually do the client fact find, the property details, so a portfolio spreadsheet will be talked about with the client, so then we can then pick and choose which lenders are beneficial to that one client.
Perfect.
Okay, thank you. Adewale was also saying, is it better to save up to pay off a Help to Buy or remortgage and pay off?
That's completely down to the individual person, really. I can't really answer that question, sorry. If you've got the money to save, then save it. But most people that are on Help to Buy, I would assume, or especially the clients I dealt with when they were doing Help to Buy applications, I would always recommend a 5-year fixed rate mortgage. So at the end of the 5 years, you've got that option then to either pay it back, sell the property, start again, or you then start paying that Help to Buy element of the actual government grant you've been given. And the reason why I'd always say 5 years, because in that 5-year period, hopefully the property would have gone up in enough value to actually get that option to actually pay that Help to Buy scheme off.
Yeah. And along a similar line here, what would you advise to do? Pay back your loan mortgage or just go on interest only?
In what respect? Sorry, Rochelle, is that to do with a residential or buy-to-let?
Don't know. Can you just confirm that, please, Rochelle? That would be great. Just while we're waiting for that to come through, Matt, I've got one here for you. What kind of returns can you see on properties using leverage?
Yeah, it's a good question. So I'll just use an example we're working on at the moment. Simple, easy, top of my head. So, for a deposit as little as £38,000, you can see a return of about 150% over a 5-year period. That works out to roughly about 30% per year. So, you know, you can see some really good returns in the market right now using leverage, you know. That's why obviously deploying your cash, getting a mortgage, and then investing in that property.
Perfect, thank you. Yeah, just going back to Rochelle's question then, Darren, I think we lost Donna again, unfortunately. So unless, like Steve, she's gone to walk the dog, who knows? But so yeah, what would you advise to do? Pay back your loan, mortgage, or just go on to interest only? That's a buy-to-let question.
If it's to do with remortgaging the property on a buy-to-let, then I would say go on interest only. When you're releasing that equity, go on interest only on that bit, and then if you're looking to buy another buy-to-let, potentially, depending on whether you're looking for income or whether you're looking for capital growth, will depend on whether or not you go for repayment or interest only again. So if you're not looking for income, then I'd recommend capital repayment. So you're actually paying the mortgage off as you go. Just depends on the client really, whether you're looking for income or capital growth really. So.
Okay, thank you. And Alistair is asking, is there much of a difference on the loan to value lending grants for foreign nationals versus expats? And are there any minimum deposit requirements value-wise that may impact the loan to value grant?
Donna, are you there?
With regards to the grants, that 9 times out of 10, it doesn't really fit with the expat, the foreign investor. It doesn't work. The type of lender that you've got available wouldn't then.
I think.
Yeah, we're losing Donna.
I'll look again. I think what Alice is probably asking there is to do with the lenders. If the loan to value is there a bigger deposit?
Allow that grant to be sat in the background. With the
no, she's gone. Right. No, you keep going, Donna. I think what Alice is asking, Donna, is the difference between foreign nationals and expats. The loan to value. To be fair, the loan to value is about the same. It just depends on expats. There'll be a few more lenders, sort of 70-75%. For foreign investors and foreign nationals, that will, instead of having say 10 lenders you can go to, foreign nationals, it might only be 3 or 4. Regardless of the loan to value.
The question was about a grant.
No, to do with the loan to value granted. So yeah, I think that's the question anyway. So does that answer that question?
Yeah, I mean, the first part was, is there much of a difference on the loan to value lending grants for foreign nationals versus expats? And the second bit was, are there any minimum deposit requirements?
You have to put 30% realistic, like Donna was saying earlier, 30% really.
Right. Okay, thank you very much. So new, Michaela is saying, new limited company, no income. Is it possible to get a buy-to-let mortgage?
Straightforward answer, yes.
Great. Okay, that's a good one there for Michaela then. Michaela's also asking, is there any interest-only mortgage for buying your first property to live in?
No. Nice and quick, isn't he?
Perfect.
If it's a first-time buyer, first-time landlord, or if it's a residential for you to live in the property as a first-time buyer, every lender, you have to have repayment. There's no first-time buyer interest only anymore.
Right. Okay. Okay.
Sorry.
Thank you. That's fine. So one here for Darren. Now somebody's tested me here.
Oh,
okay. So they're either checking to see if I can say this word.
Yeah.
Do I know what it means or whatever? Do you have Sharia compliant lending? Yes,
we do. Yeah. So
for those of us that don't know what that is, can you please explain that?
Yeah. So that's the way that the Islamic lending works. So being with the Islamic lending, you're not, as a religion, you're not actually able to be seen to borrow money or paying back a loan. So you're not able to actually borrow money. So the way the Sharia compliant works is it's either called rent only or acquisition. So the bank will lend you the money and you either renting and they own the property until the end of it. So you're renting the property, you're basically paying rent to own that property, or you're acquiring that mortgage. But yeah, we've got lenders that can do that, no problem at all. Slight higher money to pay on the solicitors, because obviously you've got to deal with the way the Islamic rules are. And there's 2 ways of doing that. I can't pronounce either one of them, so I'll just say it's Sharia compliant. Donna could probably mention both of those 2. One starts with an M And but yeah, we've got lending for that, definitely.
Okay, yeah, Mehmood's just confirmed that. He's saying Islamic lending costs more than normal lending.
Correct, yes. Yeah.
The rate doesn't necessarily.
No, not the rate, it's the legal
costs
paperwork
involved that
Yeah.
normally do.
Right, of the setup, you're saying
Yes.
then?
Yes.
Yeah, the
Yeah.
legal paperwork, because you have to have an Islamic compliant solicitor to deal with all the bits and pieces
Right.
in the background.
If you put
Okay.
it in content, there'd be like normal for a normal mortgage, there'd be like 30 pages that a solicitor needed to check. If you were looking at a Sharia compliant, it's more like 300. So there's going to
Wow.
be a lot more cost involved from a solicitor's point of view. So yeah.
Wow. And how does that, it's a question from me, how does that affect the timescale then of the whole application?
Yeah, normal mortgage at the moment is taking anywhere between 12 to 16 weeks to get to completion. With a Sharia compliant, you're probably talking 12 to 16 weeks to get a mortgage offer out.
Wow.
And then you've got probably another 6 weeks on top of that, if not a little slightly more with the, sorry, that's my dog in the background. I do apologise, not very professional.
Thought that was Steve's
Wants
dog
to go
again.
for a walk.
Yeah, once he's got no chance, it's getting late now. He's have to cross his legs. Yeah, so we've yeah, so it just takes slightly longer. That's all. Because
Right.
of the paperwork, but yeah, we could do with that, and we've got we've actually got access to solicitors can actually help with all that as well.
Right. Okay. Thank
Just
you.
to add to that as well, in all our contracts, we work with investors. You know, we can make ours Sharia compliant as well. Just to throw that in. You know, Dow, one of the directors here, you know, he's done that a lot in his career. So yeah, absolutely, we can do that too.
Yeah.
Good.
Dale actually is on here and he said our contract can be Sharia compliant and we can arrange mortgages for UAE buyers. Yeah, contact one of their consultants basically. So thank you for that. So Alistair is saying here, so no requirements on the deposit. You may recall he asked a question a moment ago. So no requirements on the deposit, only a percentage requirement. And are there any minimum loan values that the banks will look at?
So domestically, the minimum, obviously with no requirements to deposit, there is obviously you still need 30% if you're buying a new build.
Mm-hmm.
UK, you need 25%. The minimal loan domestically is about 25. Well, there are some lenders on residential that do minimum 15,000, but talking about buy-to-lets, you have to have. I think the minimal loan domestically, I think it's about 50,000. If it's an expat, minimal loans range from is it 75,000, Donna, up to 100,000. Most lenders are £100,000 lending.
There is lenders that will go as low as 30,000. However, when you look at the type of property that they're asking you to buy, the two don't marry.
No.
So the what I would say is, if you're lending 100 grand, that gives you access to most lenders as an expat foreign investor, as a minimum.
Right, okay, thank you. And Akinyeme, I do hope I've pronounced that properly. How does the share ownership work in the property market?
I better take that one, Donna, shall I?
Yeah.
I've just done one today, actually. So shared ownership helps first-time buyers or people that haven't got a property in the background. Maybe they're coming out of a separation or whatever, but the shared ownership is a really good position to be in if people haven't got the 15% deposit for a residential basis. The first-time buyer client I spoke to this one only had 5%. So the developer or the actual person doing the shared ownership has to be through a housing association doing a 50-50 split. So you own 50% of the property and you rent the other 50%. So they had 5% of their 50%. So in this instance, they were buying for 112,500, and then you had to put down 5,625 as a deposit. So you can't rent that property out. Then it has to be a residential. But yeah, there are lenders out there with a very small deposit of 5% will allow that to happen. Not very many, but there are definitely lenders out there who do it for you.
Okay, thank you. And another one here for you, Darren. What would happen if the client has exchanged and then finds there are not lending option via mortgage companies? Are there any other options open to the clients?
Yeah, so I think Donna and Matt were both mentioning this. We've got bridging finance. Obviously, it's not the best way of doing it, but like Donna was saying, we've actually got access to some private funding. So they will look at individual cases and then make a decision based on the actual risk and the client situation. But yeah, we've got options. We can do that. And in Donna's time, obviously doing this as well, we've got access to things like private banking as well. So they'll look at an individual case by case basis.
Right, okay, thank you. And Mahmood is saying, can Sharia compliant,
yes.
Can Sharia can only be like an interest only, or does it have to be like a repayment?
No, you can do that. You can't, yeah, it can be either. So interest only be called, in the Islamic Sharia compliant, would be called rent only, and a repayment would be acquisition and rent. So you can do either. You don't have to do rent only, or you can do one or the other.
Okay, thank you. Is it possible to get a pre-approval before putting deposit down?
Yeah, we encourage that, actually. Because what you don't want to do is reserve, sorry Matt, but I'm probably taking a bit of your thunder here, but what you don't want to do is reserve a property, put your, say, £5,000 reservation fee on that property and find you can't get funding anywhere.
Completely agree with that, though. That is, yeah, absolutely. We're exactly the same. We'd much rather the client know absolutely they can get their finance before putting their money down, because in the day there's no point doing that if not, because
no.
Yeah, absolutely.
Good question.
Yes, Dale is saying here, always get pre-approval first. Absolutely. So another one here, can I use the income from another investment to go down as my income for the application?
Depends on the lender.
Yeah, it depends on the lender. A lot of UK domestic stuff, you need to obviously declare it to the tax man, but a lot of them won't take rental income as earned income.
But for an investor, it means it depends on how long you've had that income coming in for as well.
Yeah.
Yeah, okay. All right, so I think that we have, let me just check every avenue here. I think I've gone through all the questions, the emailed ones, the private ones. Yes, so I think that's it. I think we've got through everything now. So Matt, Donna, Darren and David, should we give a special thank you to David?
I don't know, I'll just go get David, all right?
Would you?
There you go, Lynn. Sorry, Lynn. I had to go and walk the dog.
I would never have known the difference if you hadn't said.
Oh, Darren's a good-looking one. I'm the brains in the.
Well, I didn't like to say. But yeah, I think we've just about naturally got through all the questions now. So yeah, Matt, Donna, Darren, thank you to each of you for taking the time to be with us all today. Extremely formative and very much appreciated. So everyone, please do keep an eye out for our next webinar, where we shall, as always, bring in another hot topic to the table for you. In the meantime, please do follow us on all our social media accounts, Instagram, LinkedIn, Facebook. Where else are we, Matt? Anywhere else? The website?
Yeah, website, YouTube, everywhere.
Yeah, absolutely everywhere. And of course, YouTube. Yes, go check us out on YouTube. If you've missed any of the previous webinars, then please do jump on there and take a look at the previous ones. And it also, obviously, if you know of anyone that would benefit from any of this information that we provide to you, please do invite them along to the next one. Try and, have a think, who can we all help? We love to help each other, don't we, in the property world? So, yeah, thank you all once again for being with us today. It's truly appreciated. I'm just looking down there, lots of thank yous coming in, great session. Dale said, yeah, any questions, contact us anytime. So again, thank you for being with us. Truly, truly appreciated. Please stay safe, please stay well, and see you all again soon. Thank you very much. I feel at this stage I should say it's good night from me and it's good night from him, as the two Ronnies used to. Half of you are probably too young to even remember that.
No,
but
I remember
anyway.
it.
I thought you were going to start talking about the Chuckle Brothers then, Lynn. So.
You seem to be the expert. Right, I feel we should end this because we could carry on a whole different conversation. So thank you guys, do appreciate it. Lots of love, everyone. Take care. See you soon.
Bye.
Thank you everybody.